Let's start with the hash rate. I mean, obviously a just insane year. When we look back over 2021 for the hash rate, how do you evaluate what happened?
Yeah, we've talked about it a bunch, but just kind of, coming through all these things that, that happened in the Bitcoin network in 2021. It feels like, a few years at least. Time has flown by, but also it's felt like quite a long year with all that's went down. China banning Bitcoin mining in particular, in May, kind of near those all-time highs. And we saw 50% of that network hash rate basically shut off overnight. Not really. And it was basically the biggest attack the Bitcoin network has ever faced, maybe besides the fork wars, but from a nation state level, it was truly unprecedented. And, the Bitcoin network went on completely uninterrupted, essentially, difficulty adjusted downwards, I think 4 or 5 times in a row. And seemingly all that hash rate is back online. And it's, quite the recovery. Almost no one saw it happening this fast. So, quite a unprecedented year, but, the resilience of the Bitcoin network cannot be understated.
I also see that you've got the total miner revenue here. And I actually didn't know this until I saw that you sent this chart over, that we started with $30 million a day on January 1st of 2021. And even though all the volatility, the China ban, like the whole 9 yards, $45 million a day, 12, 29, 21. Talk to us about this. Like how important is this to see that miner revenue continues to increase at, what ends up being a pretty significant rate?
Yeah, so this was a 7-day moving average. I probably should have just thrown the annual average in over the course of history. It probably would have given a better kind of context. But I think the most remarkable thing about this chart, it looks quite similar to the Bitcoin chart. But what you're not taking into account when you're looking at this in dollar terms is that the halving happens every 4 years. It's happened 3 times already. So that block subsidy that miners are getting, first it was 50 Bitcoin every block, cut in half to 25, cut in half to 12 and a half. And just last May, May of 2020, they got cut in half to 6.25 Bitcoin every 10 minutes for the block subsidy. So miner revenue continues to go up and to the right over the course of Bitcoin's history, despite the BTC amount going down in Bitcoin terms. And so this is just kind of another chart that's showing how exponential this network is growing. And we did see, despite all the volatility and the hash rate dropping and difficulty ramping up, going down again and ramping back up, miner revenue has been increasing in dollar terms.
It's crazy to see this too. And what do you think is more important? Is the hash rate more important there, or is it the actual price of Bitcoin?
Yeah, I mean, it's almost like chicken and the egg, because the price of Bitcoin going up, a lot of miners can just plug back in. A lot of these miners are just like almost automated, and they take into account multiple variables such as the efficiency of their ASICs, that's kind of the baseline, but really like power prices and the price of Bitcoin. And a lot of these things say, like, if you're integrated with the grid, they're going off base load demand. So if demand is expected to go up, or if, there's a surge in, say, California or Texas, then these miners will shut right off. But when the price of Bitcoin goes up, hash price is also going up, which is basically it's miner revenue divided by hash rate. And when hash rate's pumping, the value of all ASICs is going up, and every Bitcoin miner is happy because they're more profitable in dollar terms.
Yeah, it makes sense. All right, we got realized market cap and MVRV ratio. Explain what both of these are for folks.
Yeah, so we talk about this a lot. We have the market cap, which is pretty simple: circulating supply times the price. Realized cap is circulating supply, and it's the price that every coin has last moved, and we can take a ratio of that and kind of evaluate how overheated or cheap Bitcoin is on a relative basis. And so we kind of can visualize these bull and bear cycles over Bitcoin's history. And if you look at April 2021, you see that ratio was really, really high, and it obviously crashed into May, June, into that summer area. And now we've kind of with realized cap continuing to increase, we're starting to get to those pretty cheap levels again. But this is just kind of a broad view of what's happening in the Bitcoin market. And I think it's a good long-term kind of view of what's happening.
Looks like it's bullish. All right, Lightning Network public channel capacity seems to have gone on an epic run, but a little bit of a drawback here. Is that something to be concerned of? And what do you think about the full year kind of performance of the public channel capacity?
Yeah, so this is in dollar terms. So it's obviously it's taking into account 2 variables. It's taking into account the growth of the Lightning Network in Bitcoin terms, or that public channel capacity, and it's also taking into account the Bitcoin price. So we've seen a small pullback in the actual public channel capacity in BTC terms, but really that pullback there is more associated with the Bitcoin price falling about 25-30% from the highs. But really what we see, 2021 was, a pretty remarkable year for the Lightning Network and the growth of it. We saw a nation state adopt Bitcoin as legal tender and really sort of kind of be adopted as a transactional medium in a way that it never has before at a large scale. So 160 million, it seems pretty small, especially with all these numbers in the crypto space. You see a lot of, say, DeFi protocols with a total value locked of billions and billions of dollars. But the Lightning Network is something completely different and unique, I would say. In the sense that it allows this, traditional like store of value or monetary asset that most people just kind of sit on and hodl. It allowed that to be more of a transactional medium where you could actually buy coffee with Bitcoin. For the longest time, it was a meme that you couldn't buy coffee with Bitcoin and it was too cheap, it was too expensive and slow, and you needed something else. Well, the Lightning Network actually fixed that. And so I think 2022, we're going to see that remarkable growth continue.
Got it. Now, one of my favorite charts to look at is usually the 0.1 or 0.01 BTC Bitcoin addresses. So these are people who have a Bitcoin address with at least 0.1 or 0.01 Bitcoin. You've got here the supply held by entities with a balance of 0.1 to 1 full Bitcoin. Talk to us about this one.
Yeah, I mean, it's pretty obvious it's up and to the right. And so I think this is just one of the things that you can kind of feel when you're talking to people in the Bitcoin space, when you're on Bitcoin Twitter, see all those accounts with laser eyes continuing to grow. There's just, a relentless group of hodlers and stackers out there all over the world, on Twitter or not. They may be public Bitcoiners or not that are just continuing to stack sats and increase their proportion of the Bitcoin monetary network. And so regardless of price going up, down, or sideways, there's a cohort of people, with size, would say like Michael Saylor, but also just humbly stacking away, getting to 10 million sats, getting to that full Bitcoin, 100 million Satoshis, and they're just, continuing to increase their holdings. And so this is kind of that stacker hodler of last resort mentality. And this is, what stops the price of Bitcoin from going down is those stackers and hodlers of last resort.